Alrighty, traders. Hello, everyone. Hello, hello, hello. Hopefully this is all good when it comes to the microphone and all that sort of stuff. In today's video, guys, I want to share with you, let me see. Is my camera all good there? Is my camera good? Let's see if is my camera all good there? I'm pretty sure it is, right? Pretty sure it is there. Anyway, I'm pretty sure it's good. Anyway, so one thing I want to, let me see if I can adjust this thing here. Anyway, all right, one thing I want to share with you is two stories today, okay? Two stories today, and I've actually just got back from the gym this morning as I'm doing this recording, and I'm going to be eating my breakfast at the exact same time. So, two stories that I want to share with you as I'm eating my breakfast right now, in hopes that it actually helps you when you're actually when you're trading the markets. Okay, so two stories that I want to share with you that has happened to me over my last 20 years of trading experience, and hopefully this helps you out. By the way, guys, I'm very big into obviously the gym and so on and so forth, so I've got some eggs, got some oats, bananas and so on and so forth, and I've got a protein shake with greens and so on and so forth. If you guys are wondering, a bit more about me. Anyway, so the first story I want to talk to you about is an AI disaster. An AI robot disaster. So let me actually start off with this. The back in, when was it? Probably, I'd have to say the 2009 to 2011 period, somewhere around about there. I was actually part of a company, right? So I was part of a company. And the reason why they brought me on is because this company was mainly focused on fundamental analysis, okay? And so they were always doing fundamental analysis, and they'll be buying stock, and they'll be doing strategies around getting into undervalued stocks. Make sense? So the whole thing about that is that this company that was mainly just focused on AI, what was happening was this company that was focused on mainly on fundamental analysis, what was happening was this company, they brought me on because they knew I was they knew that I'm a good trader, and they knew I knew my technical analysis really well, okay? So that's because that's my forte, technical analysis. When it comes to fundamental analysis and PE ratios and undervalued stocks and cash flow balance sheets, it's like, whoa, gone, right? I can't make a decision based off that. So for my forte, my thing has always been about these charts, like how do these markets actually work, and the charts and so on and so forth, right? So that's the reason why they brought me on. And the big thing about that is that after a period of time, they started getting into AI robots and AI trading systems, right? Again, and the reason I'm bringing this up right now is because I know there's a lot of people out there that are interested in these AI robots, right? It's like AI revolution right now, but it's like these things have been around for a long time. You know what I mean? So when I was part of this company, what happened was they started getting into more Forex AI trading systems, okay? And what ended up happening was, and the reason I'm talking about this right now, because I want you to be warned about trying to go down a path that is probably going to lead you to a dead-end road, okay? I'm all about helping you continue to slowly make progress and make progress and make progress, right? That's what my free trade. That's the reason why I give my free trading course away. You know, that first thing in the description, you can grab that free trading course. There's like 6 videos. I'm all about teaching you fundamental analysis that can help you continue to get better and better and better and better and better, right? Because I don't want you to spend 12 months going down a road that you realize that it's just not the way to go, right? I'd rather you spend time getting really good, so at the end of 12 months, you can continue building on the next 12 months, right? Instead of looking for the AI assistance. But I know most people are looking for the AI assistance because they're lazy. They're lazy asses, right? It's like, I don't have to do the work. I just want these systems to do all this work for me. And I'm sure you see the marketing and the bullshit things that are happening on the scene out there. It's like, this system, makes, whatever, right? It's like, I've seen it so many times. It's a lot of bullshit. Anyway, so I'm pretty blunt about that because I've just seen so many of them. It's just like, and traders, like, I've actually been part of a few of them, right? There's no shortcut to success, guys. There's no shortcut to success. Anyway, so what this company started to develop this AI system around the Forex market. Now, what they would do is they'd start up, the way this system would work is you'd start off with a really small position in the Forex market, but you'd be long and short at the exact same time. Right? Long and short at the exact same time. And so what ended up happening was, if the market went up a little bit, that long position, it would actually take it off profit, so it'd actually make a little bit of profit, and it would add another short position. And then it'll go long at the exact same time. So now we're too short, but we just took a profit, and then it also adds another one long, right? And if the market goes up even more, guess what? Now it gets out of that long position, takes a little bit of profit, goes long again, but then adds another short position. So as the market's going up, it's taking profits short, because inevitably what ends up happens to the markets, right? Inevitably what ends up happening is that the market will correct, and when the market does correct, so if the market's going up, the long positions, this is the long position, this is the short position. Market's going up, long, profit, go long again. Add short, up, long, profit, go short again, right? And it kept doing that, and it goes long. And then as the market, and then it's not exactly like 1 into 2 and 2 into 4 and so on and so forth. It's more like there was a mathematical calculations of how it actually did it, right? So it went 1 into 3 and then 7 and 12, and it did all these mathematical calculations. Anyway, so what ended up happening was that's how it worked, right? And it kept going up and up and up and up, and it kept adding to these positions, because eventually when it does come back, you get the break-even level is obviously getting higher and higher and higher. So when it eventually does start to pull back, those short positions, guess what? Then they make all these profits eventually, right? And then it restarts all over again. Instead of, it may be in a 100 contract position by the time it actually eventually got to that point. Then it retraces a little bit, gets out of, and then eventually hits the profit target, gets out of all those shorts for profits, re-goes short again, and then obviously then it'll be, but now as it's going down, it's adding longs, right? So the whole thing about, again, this was back in 2009 to 2011 period, somewhere around about there. And so what ended up happening was this company the company went under, right? And the reason why is because they eventually what ends up happening to that sort of strategy. Eventually, you're going to get one of these markets that just keeps going, and it puts so much strain on the account. It just eventually didn't work, and it actually looked promising, right? They tested it for about 12 months, and they tested it, and what ended up happening is that it just eventually come to a point where the market just moves, and it moves really big in one direction. And therefore, your position goes from like 1 to 20 to 40 to 100 to 500 to 2,000, right? Because it's trying to add, especially when it moves really, really quickly. And that's even on the downside as well too. And the whole system was a complete just. And after a while, this particular guy, who was making a lot of money doing another strategy I'm going to tell you about in just a minute, but was making a lot of money. He was making around, at the peak of it, $500,000 to $600,000 per month on average, right? So that's not every month, but on average. So this guy was actually a really, really, really successful trader. And so what ended up happening was, this is so good, guys. Oats, banana, a little bit of honey. Oh, So good. I actually got a little bit of so good milk in there as well too. Anyway, so this is just a bit of a breakfast and Johnny talk right now with you guys, and just trying to help you guys out. Okay, so that whole story there, it just never ended well. Okay, and I'm telling you right now, it's not the way to go. Okay, it's not the way to go when it comes down to you trading the market successfully and you getting handed the market successfully. If you ever want to go down that path, just realize you're probably going to be spending probably a lot of months, probably even years, that's going to end up leading you to a dead end path. And you're going to think, man, I've just spent the last year or more testing out these AI systems, these AI robots, these AI things that do all the work for me, and none of them will never work. And guess why they never work? Because there is no get-rich-quick scheme. There is no easy way out. And that's why, like, what I want for you is that if you spend 12 months in the markets, I want you to start to get really good at the foundations and how markets work with your eye, right? Now, with me, with my personal training, with my personal trading, I have systems, I have AI scans that scan the markets, scan the stock market for me to help me find the opportunities. But then it's up to me to go through those opportunities to make sure that I'm getting in on the right one. If you can combine that, that's when it becomes very powerful, right? Because now you've got AI scans helping you find the opportunities, but it's up to me to go through them to make sure that I'm getting in on the right ones. So if you are going, and the reason why I'm bringing that up is that because after this company was making a lot of money, I'm going to get to the second strategy in just a minute. This particular company, they were making a lot of money and they really stopped and they went to this other thing and they spent probably about 2 years in total developing it, testing it, paper money, real money, all that sort of stuff. And they went under. They went under big time. And it was a complete disaster. And I've seen a few other ones as well too come and grow in my past. So this AI right now, this AI revolution right now, guys, is not new. And all I say is that if you do want to do well out of trading, you've just got to manually put the work in, right? Manually get good at training your brain and your eye to see the patterns, see the systems, understanding the markets more. Again, that's the reason why my free trading course, guys, that first thing in the description, I go through the biggest mistakes I've made. I go through, trading techniques that's been working since the 1950s, right? And if you think that's what a lot of crap, it's like, go back and test it, right? Actually, in fact, 1950s, ever since the market has started, this one trading technique, it's how all markets work, right? And when you start to understand this trading technique, it's foundational. The better I get at using this technique, the more I can see who's in control, what's happening, what's the trend, and so on and so forth, right? It really, really helps me. Again, that's that second video in the trading system. But the purpose of me saying that is that I don't want you to be going down this path. Hopefully someone watches this video that stops him from going down this path of looking at the AI system, because the AI right now is on a path of destruction. It probably is, right? Especially when it comes down to the robots and stuff like that. Anyway, this is so good, guys. So that's the first story, guys, that I want to share with you about the AI systems. That over the last 20 years now, guys, I've been involved with these markets and been involved with different companies, from short-term scalping companies, from a 1 minute chart all the way down to, I think it was like a 37 tick chart, or maybe a 44 tick chart. One of those a tick chart. If you don't know what a tick chart is a transaction chart. So, like a minute chart, right? A minute chart is when the bar takes 1 minute to form and then the next candle starts or the next bar starts. A tick chart is based on transactions. So one transaction could be 50 contracts. The next transaction could be one contract. You know what I mean? So as soon as in this case 37 tick chart, as soon as there was 37 transactions gone through the market, it would paint the bar, then it would start a new bar. The reason why you'd use that is because if you're trading especially when you're trading the futures markets, outside the futures markets, and you're trading low liquid times when the market's not really moving, instead of having all these bars go sideways for 1 minute, because the market's there's not much liquidity there. The purpose behind using those transaction charts is that it would only start to move once there was enough transactions to then start to paint the candle, right? So you think about it, if there's not many transactions, maybe it's an overnight futures market, not much liquidity at that time, and you think about a 1 minute chart, right? It might just go sideways, sideways, sideways because it's just like it's not really moving, right? Because there's no volume. Well, then the transaction chart was supposed to then bring all that noise out and then use just as soon as there's transactions going through, enough transactions, it will then paint the candle and so on and so forth. Now, I'm not saying transaction is the way to go. I use a daily chart right now, guys. My whole trading and the way that I do with my clients right now is I'm all about identifying opportunities today to get in today to hopefully hold for a few days, up to a few weeks, sometimes even up to, probably my longest type of trade is probably 4 or 5 weeks. This is trading opportunities, right? The average good trade is probably about a couple of weeks. And then the average short-term trade is maybe for a week or less, right? That's the type of trading that I like to do. I like to try to get in the moves that it's likely to have a real big move. I don't use transaction charts, guys. I'm just trying to use the preferences of, I've even gone down that path of, being part of companies that use that sort of stuff. I've done a lot of different things from divergence indicators and so on and so forth. That's why when you see my charts, you will see that I don't have indicators, right? I simply don't have indicators because I just realized that they were always keeping me out, right? Like I might be in a really good long position and suddenly the stochastics and RSI and MACD will start to become overbought. And we're like, oh, it's going to start to turn around. And I'd get out. It may go sideways for a week. And then it'd go for another big move. I'm like, man, I could have just stayed in and captured that big move. You know what I mean? So that the purpose of me saying that, guys, is I've just seen so many things, and I don't want you going down the wrong path. Right? I said I want you to be making progress, and progress just one, understanding what you're doing, and then also secondly, just getting really really good at focusing on those most important things. That's going to really help you when you come to trading. And one of those things, guys, is just getting repetition is the mother of skill, and just really focusing on a handful of things that really do matter when it comes to these markets. And the techniques that I normally teach on this channel, right? I normally teach it based off, like the techniques like the trend analysis and the roller coaster pattern and the strength and the weaknesses and all that sort of stuff. That's going to start to give a bit more insight to what's going on in the markets than most things out there, right? Also understanding a thing called price and time and all that sort of stuff, right? So that's the first story that I wanted to share with you guys. And again, my whole purpose around this video, guys, is hopefully just help someone out there. Don't go down the path of AI systems. There is nothing out there is make money quick. Nothing out there, right? And if it says this marketing bullshit, make money this much per day and blah, 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 it's like, what a load of crap. What a load of crap, right? No, there's fundamental laws. If you want to put the work in, then those are the ones that actually end up getting the results. And it takes a bit of time to start to not only just know the techniques, but understand, or maybe understand what these techniques are. Again, I teach them in the free trading course. But then also for you to start to get really, really good at these techniques. When you start to understand these fundamental laws about how markets really work, by looking at trend analysis, by looking at what I call higher time frames. So if you're trading a daily chart, look at the weekly chart. There's so much power in that. And that's where, like, a lot of the times I'm just using maybe one moving average. Most of the time I'm not even using moving average on my charts. It's because it's just the most important thing is the chart, right? So hopefully this stops you from going down the road of using AI systems, guys. Again, my whole purpose as a coach and what I do is I want to teach you stuff, techniques, strategies that you can use. And as long as you stay with it and you keep getting better and better and better and better and better at it, it's not a dead end road. It's actually you becoming good, right? 1 year later, 2 years later, 3 years later, 4 years later, right? I want you to keep getting better and better because you're getting better at understanding these techniques. So the first one there, the first disaster is the AI systems, guys. They don't work. And if you're going down that path, you are a lazy ass. And stop being so lazy, right? That's the only reason why you're looking for these AI systems. Like, I want something to do all the work for me. It doesn't exist and you're going to lose a lot of money. So don't, right? But if you spent 2-3 years, maybe more, really getting good at understanding these markets and understanding strategies that based on these markets, you can start to learn how to take a small trading account into a large trading account, right? Because I can take a really good trader and starting with a $5,000 trading account and eventually turn that into 6 and 7 figures. right? Because he's a good trader, right? He knows how to cut his losses short and trade selection, so on and so forth, right? Patience, so on and so forth. But I can take a really, really bad trader and give him a prop trading account of $200,000 because he thinks the more money I have, the more money I can make. But he's a shit trader. Guess what? This is why the prop firms know this shit, right? The prop firms know this shit. Prop firms know that most people are hopeless at trading. They have no idea what they're doing. So guess what? You pay me a monthly fee and I will give you a fictitious, maybe sim trading account. And the stories that you see of people making money from prop trading, guys, guess what? That's probably like 0.00001, right? People make money from prop trading because they are an actual good trader, right? I spoke to someone just recently. He goes, I don't have a lot of money, so I'm trying to be, I'm trying to get funded with these prop accounts, these prop firm accounts. I'm like, well, let me ask you a question. Okay, so now you've got a $200,000 trading account there, and now you have maybe $500,000 trading account there. When you go to the markets, do you know how to identify a really high quality setup? Do you know how to be disciplined? I'm waiting for that setup. Do you know how to be patient and really exercising patience and not just getting into crap that's probably going to lose you a lot of money? All this stuff that goes into, like, you can have an amazing trading account and guess what? Blow it up. That's why traders, you see so many people who have made a lot of money in the crypto boom, and it's starting to happen now. You're starting to see the bumblebees come out. Guess what? Now they're starting to, anyone can make money in a big bull market. And that's what I'm going to get for you guys that have stuck around this long. I'm going to get into the second strategy now about people getting lucky in the bull market. I'm going to go back to that same company I said before that they were just using fundamental analysis. So good, guys. Oats, a little bit of almond milk, honey, and banana. So good after an amazing workout today. Anyway, I'm very big into Muay Thai, boxing, and that sort of stuff as well too. So anyway, the same company that I was telling you about, the AI systems here, this is the same company that brought me on because the techniques and so on and so forth. Their strategy, and this is the reason why I trade the way I trade, okay? There's a lot of different strategies out there that you can use. And, there's, especially when it comes down to options, right? There's a strategy called, credit spreads, right? Where you sell and buy and all that sort of stuff, right? So you'd sell and buy and you'd have a spread. I'm not going to go into details of the actual credit spread, but the issue with credit spreads is that I always found the issue with that is that it always capped your risk. Sorry, it always capped your return, right? So no matter how much that actually went in the direction, say they did what's called a put spread, and generally speaking, you do the put spread below the actual price, right? So it can go up, it can go sideways, it can go down a little bit, and you're still probably likely to, exercise worthless on that spread there. So the actual spreads itself, this is that company I was talking about that was making $500,000, I think at the peak of it, $600,000 a month on average. Very, very, very. But guess what? This particular company, well, guess what they're doing this strategy on? They're looking for undervalued companies, and they're doing this strategy in a very big, strong bull market. Very big, strong bull market. And they're going, guys, this is the reason why when I teach the way I teach, especially when it comes to the way I do with my clients, because I'm with my clients every day, I'm trying to teach them from experience of what's actually helped me, what I've actually seen in the marketplace, right? And if you're interested in becoming a client, guys, that second link in the description there, guys, go book a call with me and I'll talk to you more about that. But the second story is about these debit spreads, right? So they were making a lot of money, right? Probably for a good couple of years. The market might go flat for a bit, but for a good couple of years, the market was very, very strong, and they're doing these strategies, and most of the time it would work out. And they're doing so well. And then guess what ended up happening? It doesn't matter how good something fundamentally, and this is where, guys, this is the reason why I teach the way I teach when it comes to trading the markets. Investing is, I'm buying now for long term, right? I'm buying now for long term. That's investing. The thing about what happened with them is that when we started to go into recession in '08, the market, doesn't matter how undervalued something was, right? It just kept going down, become more undervalued and more undervalued and more undervalued and more undervalued. And they had to keep doing these things called rolling out, right? Rolling out simply means that they're gonna basically buy back their options, get out of the position, and then go do the exact same. They might do it, say, 30 days out, right? So they've got 30 days to expiration to these options. It's getting close to expiration. They're probably going to be exercised. They're going to have to get out of the trade and then go buy some more time, basically. So rolling out means they're buying more time. They get out of the trade and then they go buy more time. But that's how they actually went under. And I saw this company go from making a lot of money in a very big bull market, and then through the course of especially 2008, most of my trading at that time was technical analysis, right? The market was rolling over, rolling down. So I was just going with the market. I was buying a lot of put options at the time, making a lot of money. And this company was just, but it's so undervalued. It's so undervalued. It's so undervalued because they've spent all these couple of years in a very big, strong bull market for a couple of years going through that process. And what ended up happening, that they end up, I think it was that. And then suddenly, and that's the reason why they're like, oh, this is not working anymore. I need to transition to something else. So then they started looking at the AI systems. That was the same company. So they went from doing spreads. And this is the reason why guys I don't believe in spread strategies alone. Because when the market does start to go down, these things can go down a lot more than what they're worth, right? And they can keep going down a lot more than worth. So in the next recession, you may be good using that strategy right now, but in the next recession, you're probably going to get wiped out. I've seen so many people, especially, I used to live a long time ago in a share accommodation place, and this particular guy would not do spreads, but he would just sell naked options. And guess what? He made a lot of money through a big bull market, a lot of money. And all it did was cause 1 or 2 really bad months in the markets, and guess what? Poof! He set back to zero. I don't want that for you guys, right? I don't want that for you. I want a strategy that I can go with the market. And that's the reason why guys like doing this undervalued thing and so on and so forth. Yes, that may work for long-term investing, right? When you're talking about buying now and holding because you see the next 5 to 10 years being incredible. That's long-term investing. But the purpose of me saying that, guys, I'm trying to share with you 2 amazing strategies, or 3 things really. The 3 things that have really sort of I've noticed over my trading career, and the reason why I trade the way I trade, because I've seen these things. AI systems alone do not work. Yes, I use AI scans to help me, but they don't work alone. And if you're down that path and all you're looking to do is put money in a trading account and let the robot do its thing for you, it never works. You're going down a dead end road. You're going to lose a lot of money, a lot of sleep, and then you're going to blame the system and blah, 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 and the marketing, all that sort of stuff, because it's a load of bullshit, right? There's no get-rich-quick scheme out there. But if you want to put the hours in and a bit of work in, over the next 2, 3, 4 years, you can slowly keep getting better and better and better and better, and you can build on each and every single month and each and every single year. That's what my whole coaching program for me is all about. Is I want to teach you stuff right now that you can use next month, next year, right? You can actually use this. And the better you get at it, the better trader you'll be as well too. And the second thing was the prop firm. I talked about the prop firm. If you are a prop trader as well too, you're looking at prop accounts, and you're spending all this time trying to get approved for the prop account and all that sort of stuff, and you're spending all this time. It's a dead end road. You might spend 3 months, 6 months trying to get approved for these accounts. Then what? You spend all this time trying to get approved, but you're still a shit trader. Bring it back. What if I spend the next 6 months developing the skills of what a successful trader is? What is that? He actually has a really good trading system. He's learned to have a bit more discipline. So when he goes to the market, he knows what he's looking for. Some patience, right? Understanding how markets work, getting good at that sort of stuff. That sort of stuff, right? And we keep getting better and better and better. And the last thing I talked about in today's video is the spread strategy. If you ever think, oh, this is pretty cool because I can do a spread and I can make a credit right now, right? And that's what a lot of people do. It's like, oh man, I can do this right now, and I can get an income right now because I'm doing this. I'm either selling the option naked, which I don't agree with, or I'm doing the spread. And if I do the spread, yeah, I'm capping my risk to say maybe $1, and I then, and then I'm probably gonna, and then I may get a credit from that, of say 30 cents. So I make a 30% return on my risk, right? If you look at that, if the risk is $1 on that particular company, and you make a 30%, you make a 30-cent credit out of that position by selling and buying, then guess what? Now you made a 30% return on your risk. That doesn't make sense to me. Like, no, why would you want that for? That means that you need to be probably 70% right to just maybe break even. Do you know what I'm saying here? It's like, if you go through a period of 50-50 win-loss ratio because your trading's horrible and something's up in the markets, guess what? You are gone. I don't want that for you. That's the reason why traders, when I'm trading, I use the flipped strategy. One, I get into really good trading opportunities. Secondly, I'm always looking for reasons to get out fast for small losses. And then when I know I'm in a really good trade, I let the profits run. So these strategies out there, guys, are there. They look really good, right? It's like, oh, I'm doing these butterflies and iron condors and Christmas trees. And if you don't know what they are, then don't go down that path, right? Because it's just too complicated. Don't complicate it. For me, guys, I like to use simple strategies in the markets. And again, it's all about the actual chart. It's all about the market itself. I like to get into really good opportunities. And if I can buy some options on that company, really, really good. If it goes against me, then I might be out 20 or 30%, maybe a bit more. And if it moves for me, then I could be up 100%, 200% or more. You know what I mean? So that's the ranges that I like to work with. High success rate. Ability to be able to cut my losses short, so I'm having small losses as much as possible. And then when the wins come, so I could be 50-50 right and have a horrible win-loss ratio for a month or two, and still with that, still have a really good opportunity to not only break even, but actually still make money in those really rough sort of 50-50 times that may come through your trading. Make sense? So this is about having the foundations to set you up for success in your trading there. So there we go, traders. I hope this helped you out. There's a few things here that, if you stay to the very end, give me a hell yeah in the comment section below. I know this video has gone on for quite a bit of time now, guys, but I really wanted to share these stories with you as I was eating my breakfast. I still got to finish it. And my hope, guys, is that it just gives you some guidance and insight that if you actually want to be somewhere 12 months from now, 2 years from now, it's all about utilizing techniques that you can keep getting better and better and better and better at. These strategies out there that sound good, right? Spread strategies. Spread strategies don't mean shit if you're getting into the wrong trades. If you don't understand the markets, you don't know when to get into a really good trade, right? Spread strategies don't mean that's not. I do spreads and I do iron condors. That doesn't mean shit to me, right? Because if you're getting into spreads and you're always getting into the wrong trade, you're probably gonna, it comes back to you becoming a good trader, and that's understanding foundations and how markets work and all that down home country goodness. So there we go, traders. That's it for me today. If you would need some help, guys, you may want to be interested in my actual coaching program where I'm with you every single day, and I'm coaching you and helping you and I'm guiding you through these markets. And this is stuff that I talk about with my clients every single day because I trade the markets for half an hour, and then when the market closes, I'm with them for another half an hour or so talking about even this sort of stuff, but I'm doing this on a more in-depth basis, but every single day. So there we go, traders. Have an amazing day, and I'll speak to you real soon.